There's some selling pressure from existing holders. There's buying pressure from ETFs and entities like MicroStrategy. We're slowly building out of the space, is my expectation. So if people ask me, do I think it's more likely that Bitcoin breaks out of the space or breaks down from the space? I think it's much more likely that we break out from this base, whether it's 2025. I tend to think that we're going to break out of this. I have a little bit more concerns around how large holdings of an asset will impact proof of stake networks versus proof of work networks.
What is your general outlook for the next year? Do you think it's like more bullish or bearish? Just your thoughts on that topic. Thank you.
In this market analysis, we bring you a major update from Lyn Alden, who recently shared her latest insights on the current state of the Bitcoin market. In a recent interview on the Sophia channel, Lyn discusses her concerns and predictions for 2025.
You said that this cycle is influenced by larger pools of capital relative to previous cycles. Are ETFs a net positive or a net negative for BTC and ETH? And is there a difference between them as in what they mean for the market? And what's BlackRock's impact on the market overall?
A lot of people ask if it's good or bad. I step back and say, first of all, it's inevitable. Any asset that gets sufficiently large and liquid is going to have ETFs for it. That's basically like the fiat system's API for plugging into it. That's just how they plug in. And so if any asset can't handle ETFs being made for it, like if that's a problem, then that asset was never really useful to begin with. That's like a fairly low hurdle rate that an asset has to step over to be globally relevant. On average, I view it as a net positive because it basically just means that there were large pools of capital that wanted to be in, but didn't have a regulatory or functional way to get into the space earlier. And so you had to use inefficient proxies like, Grayscale, where in addition to being prone to the price of the asset, you were also focused on is the premium going to turn into a discount, or how deep can the discount get? Can the discount ever be resolved with like redemptions of any sort? And that of course blew a lot of people up in the past cycle when people were leveraged based on that issue. So you could argue that if spot ETFs came earlier, the last cycle could have been less damaging for people in the space. Then there are pools of capital that, like, for example, they can't even buy like a Bitcoin ETF. They can only buy, like, there are large pools of capital that can only buy stocks, like companies, or can only buy bonds. Right now, the main entity filling that role is MicroStrategy. So if you're a stock, and if you run a stock fund and you happen to be bullish on either Bitcoin or the space, one of the only avenues they can express that view is either the miners or MicroStrategy. Currently, there's not that many ways for them to express bullishness on the rest of the space. There's not really like that companies that are heavily engaged. Maybe Coinbase is probably the best way they could express that. Same for bonds. So MicroStrategies, for example, issuing bonds, convertible bonds. So if you happen to be a bond investor that happens to like the space, that's one of the avenues that they can express it. And the high premium to NAV shows that there's a lot of built-up demand among institutions for these types of products. And so when we come back to the spot ETFs, basically there's pent-up demand for these assets, and now that's being met. I have a little bit more concerns around how large holdings of an asset will impact proof of stake networks versus proof of work networks. But that still remains to be seen. And then it's also possible that because the current regulatory environment doesn't allow staking yields in the ETFs, that could slow down the attractiveness of those products compared to if we get products where the staking yield can be part of the total return environment.
What is your general outlook for the next year? Do you think it's like more bullish or bearish? Just your thoughts on that topic. Thank you.
I generally view it as probably more bullish, and I'm looking for global leadership rather than like U.S. economic leadership. So rather than kind of the U.S. pulling the world along, I think that kind of like the 2001 to 2007 cycle, that was a period where non-U.S. entities were kind of ahead and pulling the U.S. along. So I think that's a realistic possibility of the next few years, which is that the U.S. kind of softens or doesn't particularly flourish per se, but that the fact that a lot of countries have gotten through a tightening cycle and are now able to ease can allow kind of like BRICS-led growth or just general global-led growth compared to the U.S. And so I think that's a key thing to watch. But other than kind of like that variable, I tend to have a pro-liquidity view for 2025. And I think that a lot of that is basically that fiscal's still going to be a pretty big background force in the US and some other countries. And then we might have a more positive credit cycle on top of that in contrast to the last 2+ years of a very sluggish credit cycle. We generally see there's some selling pressure from existing holders. There's buying pressure from ETFs and entities like MicroStrategy. I think we're slowly building out of the space is my expectation. So if people ask me, do I think it's more likely that Bitcoin breaks out of the space or breaks down from this base? I think it's much more likely that we break out to the upside from this base, or whether it's 2025. I tend to think that we're going to break out of this, but I think that right now it's a bullish asset. It's just that some of that like artificial demand was pulled forward, and that's one of the biggest headwinds against it. But I think that we've kind of gotten to the point where we worked through that. We kind of worked through some of that accelerated expectations, kind of renormalized.
Over the past week, Bitcoin went through its first major price drop of this bull run. This happened after the Federal Reserve made cautious remarks about the Bitcoin strategic reserve and predicted low inflation for 2025. These comments caused a correction in Bitcoin's price, slowing its push toward the 110,000 target. However, this drop also gave investors a good opportunity to buy Bitcoin at lower prices using strategies like dollar cost averaging. Although the correction temporarily slowed Bitcoin's momentum, there were still positive developments in the crypto world. The Bitcoin ETF market remained active, achieving new milestones and driving progress for the broader cryptocurrency space. These advancements show the growing maturity and adoption of Bitcoin and the wider crypto market, even during price corrections. These developments highlight how the crypto market is moving forward despite challenges. Don't forget to like and subscribe, and let's keep this bull run going.